The world of employment satisfaction is an ever-evolving landscape, particularly in America today. According to the Bureau of Labor and Statistics, the average American changes jobs every 4.2 years, and during the course of their professional life, the average American will change jobs and occupations an average of 10 to 15 times before they retire. Now, if I asked you to compare the amount of times that Americans change jobs versus how many millennials use and occupy self-storage unit facilities, you may be asking me, where's the link? But before I do that, let's give you the other statistical side of the coin. It is estimated that interest in self-storage has increased in over 75% of the top metros. This is according to the annual survey of self-storage preferences conducted by StorageCafe, a national and nationwide self-storage search website. Among those top groups who are planning to rent a self-storage unit now or into the future are millennials, at a clip of 25% of all Americans as of 2024 who are interested in self-storage facilities and rental units. Now, let me get back to the common denominator in this story. And my friends, it happens to be my friend Sean Graham, who began his career as a CPA and quickly realized the traditional career path in corporate America was not for him, and he quickly explored the path of real estate. His first property was an FHA-financed house hack. After exploring the side of residential rentals, he quickly moved into self-storage facilities because he was drawn in by less tenant turnover and streamlined management. He used SBA loans to acquire his first storage facilities, and he says that the SBA is a tremendous resource for anyone looking to do the same. Along the way, he realized the value of cost segregation, reducing the taxable income on properties, and he created Maven Cost Seg to take advantage of that marketplace. He joined me this week to talk real estate, self-storage units, and so much more. This is a high-level conversation about investing in real estate, life, and everything in between. And it's one that I don't think you can afford to miss. So, without further delay, I'm Kevin McShann. Let's have this conversation. Sean, if you're ready, my friend, I'll take a moment to welcome you to the program, and I'm super excited to learn how you're making a difference in the world, my friend. Happy Friday, and it's great to see you this afternoon.
Thanks, Kevin. Thanks for having me. I'm excited to be here.
Absolutely. No. Sean, I know that you started your career as a CPA, but you quickly realized that public accounting wasn't for you, my friend, and it wasn't the path that you wanted to go down, and that led you to explore real estate, my friend, starting with your first property, which you financed, my friend. So tell me about your journey, my friend, and how you got to where you are today, my friend.
Yeah. So, oh man. So going back, I think I always had that entrepreneurial itch. Like I wanted to do something on my own, right? And it's kind of difficult when you're in college and you're a kid. You figure out like, what do you want to do, and or what kind of business do you want to build? And the answer is like you don't like for me, I didn't know, right? I had lots of ideas, but I always saw finance and accounting as the backbone of business. And and I thought it's the hardest thing. Like the hardest thing to learn is actually the numbers and understanding them, but it's the most important thing to me as well. So I went down the accounting route, and honestly, I felt like a fish out of water. Like I didn't think it was like a natural path for me to go down with the public accounting. Um, but I did it anyways, and I pushed and I got through it, and I went into public accounting. I got my CPA license. Super glad I did it, and it gave me a very good foundation, which is what I was looking for, right? And that's just with financial statements, with forecasting, budgeting, taxes, cost segregation, which we'll talk about, like all these different things. And that allowed me to kind of branch out and start my own real estate journey, an entrepreneurial journey as well. So as my career progressed, I started getting like more and more into real estate. I think I read the book Rich Dad Poor Dad like back in maybe it was over a decade ago, and it just really kind of hit me that I didn't want to simply work for somebody else like or a corporation like my entire career. Like I knew that, right, but it kind of gave me the a path forward, right? And that made me realize that real estate was a great path. So that's where I started investing in real estate on the side and buying rental properties, which eventually snowballed into many entrepreneurial adventures.
Yeah, absolutely. And Sean, you brought up something interesting. So before I ask you about transitioning to self-storage units, you brought up the idea of a backbone in business, and every entrepreneur has a different definition of what that means. So, what do you think it means to have a solid backbone or plan in business? What does that mean to you?
Well, it's probably different for every single person, right? But I think, for me, I think talking to people uh, always came more natural. So the sales aspect kind of came more natural, and so I wasn't really interested in going into sales, but like accounting didn't come naturally necessarily, right? Like I mean, to a degree, but the when you really got in depth and you got into like financial accounting and tax and the complicated stuff, it wasn't a natural thing. So to me, that's what I needed to build up, the skill set I needed to build up, and that backbone or that foundation. But I think it could be different for different people, right? Like for somebody who's the opposite, well, maybe I mean, there's people I went to school with where the numbers and accounting and everything just came very naturally. It's very easy, right? But maybe they needed to go build that foundation in sales, and if they wanted to be an entrepreneur and go take like a sales job or go knocking on doors. I think it's different for each person, but one thing that I think there's both those things are universal if you are going to be an entrepreneur. One is you have to be able to talk to people. You have to be able to sell. You have to be able to have conversations with people who are different than you, and people who are further along than you. And you also need to know and understand financials. Maybe you don't need to be a CPA, but you need to be able to understand financial statements, profit and loss statements, balance sheets, and cash flow, and do some projections and forecasting. So you can hire those things out, right? Of course, you can hire salespeople, you can hire accountants as well, but it's very helpful to understand those things. And That's my perspective, at least. Like that's been true for me. I know that doesn't apply to everyone. There's plenty of entrepreneurs who are very successful and they don't know a thing about accounting, and that's great. But I think it's helpful to kind of have a baseline level understanding of those different aspects of business.
Yeah, absolutely. And my friend, I know that your career started with residential rentals, my friend, and that you quickly turned into self-storage facilities, which then allows you to find your footing in what you're doing now, and then you you sort of created or latched onto a market that you found success with, my friend. So I'm wondering if you can tell me about this transition and why it's been so fruitful for you.
Yeah, so I think it's interesting to see how life progresses, and you don't know necessarily where this next thing is going to lead you. What step it'll bring you to next. So it could be 2 steps down the road or 5 steps down the road, but things build on each other and they gain momentum. They start to snowball. Then one opportunity might lead to another opportunity. And so for me, I started out in accounting, and then I started buying real estate on the side, right? And I was still in accounting, I was still a W-2 employee, started buying real estate, and that went very well. And I started building up a small real estate portfolio with the intention that I would eventually go into real estate full time. And so um, eventually it came time I lost my job, and which was, it was okay. It turned out well. Company decided to go in a different direction. They needed somebody who's more experienced as the company grew, and they changed what they were doing, and they decided I wasn't that guy. So I said, okay, this is all right. Like this is where, I want to be an entrepreneur. I don't want to work for anybody else. And I went into real estate full time after that, and specifically self storage. The residential kind of led me into self storage. And self storage is really, it's a business. It's real estate, but it's also a business. You have to own and operate and run a self storage facility. You're renting units to people. It's not a place where people are living. But self storage got very very interesting. I learned a ton. I have 4 self storage facilities in the Midwest, in Michigan and Ohio, and I learned how to raise capital and acquire deals and all sorts of different skill sets and things. And I got very good at operations. So I started operating the self storage facilities with overseas employees, people from different countries, right? And started leveraging the different pay scales and pay rates in different countries, right? So it's much more affordable to hire somebody over in a different country than it is here. Meaning, like I couldn't hire a full-time U.S. person to run and operate like a small self-storage facility, right? Like it literally just doesn't make enough money to do it. And also I couldn't do it full time because I'm doing multiple other things as well. And so that got me into the business of hiring and getting very good at hiring people from around the world in different countries. So we'd hire in the Philippines and Egypt and Central America, in the Middle East, Latin America, South America, all over. And we got very good at this and operating self-storage, helping acquire self-storage facilities too, calling. And eventually I opened up a company to help other entrepreneurs do a similar thing, do the same thing. So we have a business, it's called Maven Success, where we help US or stateside people, actually anywhere, but we help people hire all over the world. And it could be accountants, it could be engineers, it could be sales reps. There's a lot of different types of jobs and roles, social marketing, all of that. And really, we're just doing the work. We're doing the work of vetting people from top to bottom. So, vetting resumes, English testing, skills testing, doing the one-on-one interviews, and narrowing this pool of candidates down to actual like top candidates for customers to interview. Does that make sense? What I'm saying?
Yeah, absolutely. And Sean, I know that you have the experience of using an SBA loan to start acquiring these storage facilities, my friend. So I'm curious to ask you about that process and how you think other people can use what the SBA offers to launch their businesses, my friend. What are your thoughts there?
SBA is great. I mean, that's the U.S. It was built on small businesses. Now, I mean, there's tons of big corporations and everything now, but the U.S. government is still supportive of small businesses, right? And the SBA, or Small Business Association, is a way to help you acquire small businesses. Now, that's I when I went from residential real estate into commercial real estate, I had to choose which asset class to go into. You can go into anything. The cool thing about self-storage is it's actually looked at as a business. It just has all the benefits of real estate. And because it's a business, the SBA will fund it. Whereas the SBA won't fund, you can't use an SBA loan to acquire multifamily property or to acquire office space, anything like that. But you can use the SBA loans to acquire self-storage facilities. So that's what we did. We used SBA loans, used a couple of those to acquire self-storage facilities, and that's how we broke into the business. I would highly recommend it for people looking to get into self-storage, but really any type of business. If it's a service business, I mean, a friend of mine, he just bought it was an acoustic engineering firm. And so like they'll put the paneling, right, within rooms or restaurants or offices on the walls to make sure that the sound bounces off the walls in the correct manner where it's not going to be too noisy over here or is comfortable for the customers or the clientele, which is really cool, right? It's just a very niche business, but how we acquired it was through an SBA loan. And so SBA, that's the government backs them, so the banks are more willing to lend on a business because it's backed by the government and supporting that loan. And you can also use pretty high leverage, like you can put down as little as I think 10%. It's typically around 15%, but it could go even lower just depending on the circumstances. And it's a good high leverage way to enter into a business. So if you're an entrepreneur, you're looking to acquire a business, I'd highly recommend talking to, some SBA bankers and just seeing what the options are. And I can always recommend people as well.
Yeah, and Sean, I'm also curious to ask you about scaling investments because I know that you have experience in that realm. And what do you think is the key to scaling an investment efficiently, my friend? What are your thoughts there?
When you say scaling investments, do you mean like real estate specifically? Is that what you're thinking?
Sure, we'll go with that, or investments in general. What are your thoughts?
Yeah. So, oh man, it's such a good question and it's a tough question. So it depends on your position, right? Like how you're approaching investing. And so you have there's so many different options, right? So I think when it comes to, the simplest way, right, is like if you just have extra money you're looking at and you want to invest and you want to get into real estate, right? Like low down payment ways or ways of breaking into real estate are using FHA loans, right? Buying multifamily properties where you could house hack them, live in a unit, and put very little money down and become a landlord, like a duplex or a triplex, things like that. You can do it as little as like 3.5% down. That's great. If you have, you want to get into a business, you can use SBA loans, right, to do that. if you are a high income earner and maybe you just want to keep your W-2 job, or you make a lot of money and you're a doctor, a lawyer, or attorney, or whatever it is, well, then you want to find good operators where you can invest your capital, and as a limited partner, right? So we've done some self-storage deals where we are building, it's too much to me for me to acquire by myself, so we'll bring in a group of investors and we'll raise capital to actually acquire a self-storage facility, right? So limited partners invest in those, and those are high net worth individuals who will invest, $50 or $100,000 towards the equity injection, to invest in this asset, and like the general partners are running it, and they're operating the investment. So if you have the money or the ability, the funds to become a limited partner, I think it's really good to invest with people that you know and invest with people that you trust, but also diversify your investments, right? You don't want to put all of your money with one operator in one single asset class, but maybe invest with a few different operators, some in self-storage, maybe some in multifamily, and whatever else you're interested in, and do it that way to kind of diversify your portfolio. So that's on the real estate side. I think when it comes to investing in like stocks or the economy, that's not really like my expertise. I'm more of an index fund guy, where it's, hey, rather than me picking the correct stocks, let's just dollar cost average into like total stock market index fund, which means just essentially buying a piece of the stock market every single month, not an individual stock, and just investing the same amount every single month. And eventually you ride the ups and the downs, and you kind of grow your investment portfolio with the market. So essentially, if you believe that the US stock market will continue to grow, you're just buying a piece of that market, and you're not trying to time it. You're just buying the same amount every single month. I think it's good to do that. And then, I think a small portion where you can take a little bit more a risky standpoint, it's good to invest in something that's a little bit more speculative, but not where you think, like it needs to be, it's less of an investment and more, what can you, if it's wiped out, can you afford to lose this? And this is my approach, right? So I take a small amount of my investment and I just dollar cost average into Bitcoin, just buy the same amount every single month. Now, we all know Bitcoin can go up super high, it can crash, it can go super low. But to me, if I lose it all, I know like it's okay. I'll be all right. And if it does really well, I'm glad I got a piece of it and I'll be a part of that, right? But I'm not putting all my eggs in one basket there. So I guess I should preface with saying this is not financial advice coming from me for anybody, but this is just what I do and how I think about investing in real estate and outside of real estate.
Fair enough, my friend, and I know that you're a big believer in the fact that people should know about their sort of taxable or identifying and claiming tax deductions on profit, my friend. So why do you think this is so important, and what do you think people need to know?
Yeah, so if you own real estate in the US, you have to depreciate the real estate. The IRS requires you to depreciate it, meaning if you have a building, investment property of $275,000, well, you have to take about a $10,000 deduction every single year over 27 and a half years. And that's great. It helps lower your taxable income as required by the IRS. Now, this isn't a real cash flow expense. Depreciation is like this phantom expense. So it's not actually money coming out of your bank account. It's just something to help lower your taxes, right? And it's for the wear and tear. The IRS says, well, hey, a property the wear and tear will happen every single month. or every single year, and we'll let you kind of write that off and depreciate the value of the building. Now, in reality, most of the times, real estate, like often it appreciates, it goes up in value. But the IRS says, well, we'll let you write it down so it goes down in value. Okay, fantastic. Now, my business, Maven Cost Seg, or Maven Cost Segregation. So with Maven Cost Segregation, we do engineering studies where we say, hey, IRS, not everything in a building takes 27 and a half years, or for commercial real estate, 39 years to depreciate. In fact, appreciation on the real estate. So it's kind of a time value of money concept, Kevin. If I said, hey, Kevin, if I could give you $1 today, or I could give you $1 in 30 years or 40 years, what would you rather have? You'd say, well, I'd rather have the $1 today, right? $1 today now is worth more than decades from now. So we take the depreciation and we're able to front load it so you can get those benefits now. And we do these studies, and it's really good for real estate investors, and it's a way for them to use these losses to offset their income, and ideally eliminate their tax bills overall.
Yeah, and Charles, I know that when you first started your business, my friend, you built a in-house team of CPAs and engineers to conduct, as you said, detailed studies to manage, back office tasks, my friend. So tell me about putting together a staff of people and an operation, and your view on how to do that efficiently, my friend.
Yeah, so I have U.S. partners, and also have people from all over the world who work for me in different countries, and I have about 10 people on my team. I'm a CPA, so that's kind of my background, and I handle that part. But I have somebody who helps with accounting and finance in-house. We have engineers who do all of the engineering work in-house for these cost segregation studies. I think the biggest thing, like one really important role that I've developed internally, is what we call project managers. And so what I mean is, like, I'm very customer facing. I help the clients with tax advice and tax strategy and being able to take advantage of depreciation with their real estate. And then the engineers are actually completing the studies and doing the engineering studies, right? And so there's always this gap between me with sales and customer facing and operations on the back end. And so we have project managers that help bridge that gap and talk and be the intermediary between operations and sales. And I think it's just a really important role. And we pride ourselves on two big things, and that's one, quality engineering reports. And we are aggressive with our approach, but we don't push things outside of the normal range. And so we're not going to do anything where you're going to get flagged, right? We do it in an honest and ethical way, but we really diligently go through these investment properties to get as much depreciation out of them that we can. The second thing that we pride ourselves on, though, is communication. And so we pride ourselves on continuously communicating and updating customers, right? But you need those project managers to really help with that, to help bridge the gap of, like, well, where are we on operations and with engineering, and where are we with the customer, and continuing to touch base with the customer and making sure that there are no gaps in communication. So that's a big part of our operations as well. But it's been fun scaling and growing a small business with people worldwide.
Yeah, absolutely. And Sean, tell me, what do you think it means to unleash a property's full potential and maximize its cash flow and value, my friend? What are your thoughts there?
So depreciation is huge. Like, what we do is, if you're a real estate investor, you come to us and you say, hey, I need an estimate for a cost segregation study. Well, if you give us the address and you give us the purchase price, tell us, any rehab costs and when you started renting it, and we can look at photos, we can get you a pretty good estimate, a pretty accurate estimate as to the amount of depreciation that we can get you. So if you take this depreciation, all right, this is going to help offset your taxes, your taxable income, your rental income, potentially even like your W-2 income if you're a real estate professional, or your spouse's. And we're going to use this to decrease your tax liability, which is a big tax impact, and that's real cash flow, right? Like if your tax bracket, you make $100,000 a year and your tax bracket is 25%. Well, if this can offset that $25,000 tax bill, that's real cash flow hitting your pocket. So we do free consultations or estimates where we'll get you the information, say, hey, this is how much it'll cost. This is the benefits you'll receive. This is what it'll look like every single year over the course of the life of the property. And this is the impact that you'll have and the return on your investment. That's what we specialize in, and you really just have to reach out to us to, get that estimate.
Yeah, and Sean, tell me, what do you think is the key to reducing the taxable income on a property? What are your thoughts there?
It's really depreciation. So it's this balance, right, between like, you don't like, obviously you want profitable real estate, right? That's why you go into real estate, is for one, appreciation, and two is like cash flow, right? So lenders on one side, if you're buying real estate, they know and understand depreciation is not actually an expense. So you could show zero taxable income, but they add back that depreciation, those depreciation losses. So you actually they know that you're a profitable company, even though on taxes it says you don't have any income. Or you're not profitable, right? Because there's a difference between tax liability, taxable income, and actual like profit and loss. So obviously you want to invest in profitable real estate, but the depreciation is what is going to really lower that taxable income and limit the amount of profit. And if you do the cost segregation study, you're going to get this big loss up front, and it'll offset that income. And then if you have extra, which oftentimes you do, it'll continue to roll forward into future years, and you can use that to continue to offset taxable income. It's also good with capital gains. So what I mean by this is if you have multiple pieces, multiple investment properties, and let's just say you have property A and you sell it and you have this capital gains, you profited from it, you took some depreciation, you have to pay depreciation recapture, it goes towards the capital gains as well. But you have property B over here. Property B has a ton of depreciation too. You can use the depreciation from property B to offset the capital gains from property A. So it's this continuous game. What real estate is the government is incentivizing you to reinvest in real estate. If you stop reinvesting in real estate, well, then they say, okay, well, the tax bill is due now, right? Like you can't. This is really a deferment in taxes. It's not a permanent strategy unless you just keep playing the game forever, and then whoever inherits the property, it just everything resets, and everything kind of it gets reset to market value. But you're using the depreciation to offset capital gains when you sell, to offset rental property profits or income, to offset other taxable income, and that's why some of the biggest real estate investors in the world, they don't pay any taxes.
Yeah, well, I appreciate that explanation, my friend, and I'm also curious to get your thoughts on findings from Zillow, which reported last year, my friend, that the youngest adults in America believe that they have confidence in real estate, and among those who participated in the report, aged 18 to 34. 33% of them believe that buying a home or investing in real estate is an excellent investment compared to 29% of working age adults 35 to 54. And then finally, 27% of older aged adults, 55 or older, also believe in that. So I'm curious, what first comes to mind when you hear those statistics, my friend?
Good question. So I think real estate is a great investment, but you have to look at it in different ways, right? So like if you're investing in an investment property, a rental property, that's one thing. And you're investing in it for cash flow, rental, income, and ideally appreciation. So primary residences are a little bit different. They're not investment properties. You can't depreciate them. You have to, you're buying a property for your own good. It's not really like any sort of business. I think it's extremely important to buy real estate that you believe will appreciate long term and it's going to continue to grow. So you believe in the area, the location, right? Buying your own investment or buying your own primary residence, it's not going to cash flow. You're going to have to pay the mortgage every month, the taxes, the insurance, the principal, the interest, all of that. So it's money out of your pocket. It's really, in that sense, it's a liability. It's taking money from you every single month. You have to pay for the repairs and maintenance over time. Now, you're paying down the principal, which helps you build equity. But if you buy in locations that you truly believe in and are in the path of progress and growth, well, the idea is that your primary residence, it continues to go up in value. And so I think the key is with primary residence is to buy in locations that in 10 or 20 years, if you ask yourself, will this be worth, a lot more than it is today? Then, it's just a key question to consider, because if it's in an area that maybe is rough or maybe isn't like the trends aren't great there, right? Or people are moving out of, well, it could be worth less in 10 or 20 years, right? Even though it's less expensive on a monthly basis. So the two separate things. One is the cash flow, and with the primary residence, you have a negative cash flow, it's money out of your pocket, it's a liability. But you also have to look at the appreciation and the equity build over the long run, because a lot of people build wealth that way.
Yeah, absolutely. And Shadow, what would be your best piece of advice for any young professionals looking to enter this field? And what do you think is the first couple of steps that any young real estate investor has to take to be successful in the industry, my friend? What are your thoughts there?
I think getting started soon, quicker, is better than waiting. I don't think, I think it's good to, if you're young and you're in your early 20s, buy some real estate, house hack, buy a primary residence and turn it into a rental property, rent rooms to your friends, or buy a multi-unit property using an FHA loan and rent the units to other people. You have to get in the game. You have to play the game in order to reap any benefits. You'll make mistakes too. You'll win some, you'll lose some, but you're going to learn. You can't win if you're not playing the game. So I think that's crucial, is just like to get in and to think through what you're actually buying, and making sure it's in an area that's going to appreciate. And if you can get cash flow right away from renting rooms or renting other units in your property, fantastic. That's that's amazing. That's even better. But you just gotta take action and get in, and there'll be sacrifice too, because a lot of your friends will be living in expensive apartment buildings or really nice locations, and they're having a blast, and you're far away. because you're invested in a property in the suburbs that it's a different strategy and there's a sacrifice there, right? But where do you want to be? What do you want to do? And um, how will this affect you in 5 years? And it could help you really, really take off. So I would say my advice is to take those risks and do those things early, before you kind of get set in comfort of wherever you are, and before you have too much responsibility where you can't take those risks yourself.
Yeah, absolutely. And, Sean, I've got two questions left for you. And the first has to do with managing a small business and self-storage facilities in general, my friend. What do you think is the key to managing small businesses successfully, and how does that apply to managing a self-storage unit, in your opinion?
I think I touched on communication. Communication is really big. You have to act quickly, act with speed, and communicate proactively. If customers are coming to you and asking for updates, that's a sign that you are not proactively communicating. It's better to over communicate and give updates than have customers come to you and try to figure things out. So that's the way I look at the cost segregation business, and just more of a service based business. When it comes to real estate, I think a lot of operations can be and should be done in-house. And that gives you the most control over your asset. It gives you the most insight. It helps you make strategic decisions, and you can do it. I think there's this conception out there that it's too much. You can't do the property management yourself, but you can if you do it correctly and you build out a really good internal team. So I recommend looking at overseas hires to do that as well. And if you're interested, we could help you with that.
Yeah, and Sean, I know that you live in the Detroit area, my friend, and I know that the Detroit area has gone through a bit of a renaissance, both from a public-facing and business perspective. So talk to me about doing business rather in Detroit, and the advantages that come with that, my friend.
I have a duplex in the Detroit area that it's right outside the city that I invest in, and actually house hacked, and that's been fantastic. Other than that, my real estate's not actually in Detroit. It's in other areas of Michigan. And I have it in Chicago as well. I have Ohio as well. So all throughout the Midwest. So it's more just where the opportunities are. But Detroit's it's really made a huge leap in the past decade, even more, maybe 15 years. Every single year it just keeps growing and growing. When I was a kid, we didn't really go downtown to Detroit for anything, not even sporting events, nothing. And now my wife and we go downtown to Detroit every single week. So there's a lot of opportunity, but Detroit's a big city too. So I think it's being careful of like where you invest in. Just because a property is free or you just have to pay off the tax liability to get it doesn't necessarily make it a good investment. But on the other end, I'm sure there are opportunities where Detroit's really growing and there are great opportunities. So you have to get to know the city on a detailed level. But I'm a big fan of the city of Detroit.
Real estate and business is all about location and opportunity, isn't it?
It is. Yes, you said it very well, Kevin.
Absolutely. Sean, my final question for you today has to do with your life and your legacy, my friend, and how you want that to be defined, my friend.
I think I want to be defined as a really good father and husband, really good dad, really good husband, and somebody who you can go to and trust, rely on, and somebody who's like a lot of fun to be around. That's what's important to me. So I have I have a 2-year-old boy. I've got another one on the way. So that's kind of my focus right now, is just, growing my business and then being the best dad that I can be. And that's where I spend most of my effort. So it's cool because I'm kind of a kid at heart, and I get to relive a lot of childhood things or have fun. And there's a reason when it's freezing out here and you got a bunch of snow, it's like, all right, well, let's go sledding, or let's go ice skating. And we get to do those things that as an adult you don't really do as much, right? You're not interested in doing that so much on your own. At least I don't have a habit of doing so. But as a dad, I get to go do those fun things. And so it's really just, personal growth and being the best version of myself that I can be.
Well, family always comes first, doesn't it?
It does. Yep.
Absolutely. And Sean, finally tell me, if people want to get connected with you and they're going to want to do in the real estate and self-storage space, my friend, what's the best way they can do that?
Yeah. So I created a discount code for your listeners for my companies. So my one company is Maven Cost Seg. So it's mavencostseg.com/conversation, as in your podcast name. Let's have a conversation. And that's to get a cost segregation study on your real estate. And then also, if you're interested in overseas recruiting or overseas hiring, we have a firm, and it's Maven Success. So that's mavensuccess.com/conversation. There's a discount there as well. And that way I'll know listeners came from your show, Kevin. But Maven is spelled with an M, Maven. And also feel free to reach out to me, Sean, Sean, at mavencostseg.com. But happy to, share my calendar link if you reach out, and we can have a conversation and go from there.
Well, fabulous, my friend. I have to tell you, it's been a busy week of conversations for me, but this has certainly been an insightful one, my friend. So I want to thank you for bringing your A game to this conversation and engaging in conversation with me. It's most appreciated, my friend. I want to thank you for being here.
Thank you, Kevin. Thanks for having me. It's been a lot of fun talking to you, getting to know you, and congrats on your success with the podcast. You're doing a great job.